Investing and saving are two different things. And if you only invest out of your personal pocketbook, you're the least efficient from a tax standpoint, right? And that's what most people do. They don't make the decisions. And so they end up being what they think they're efficient because they're making money, but they're leaving money on the table because of tax inefficiency.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny, and I'm joined today by Jason DeBono. Jason graduated from the University of Central Florida and has since acquired 18 years of experience in the self-directed IRA industry. He has served as Director of Business Development, Director of Operations, and Vice President for NuView Trust Company, self-directed custodian with over $2 billion of assets under custody. Now in his role as president, Jason oversees day-to-day activities of the company. He's heavily recruited to speak on podcasts and national events as a subject matter expert in tax advantage investing through retirement accounts. Jason, welcome to the show.
Hey, Jonny, thanks for having me, man. How are you?
Doing great. We're happy to have you. A lot to talk about today. We can go in a million different directions. Let's first start. You've got obviously 18 years in the industry. Talk about how you found the industry and what's kept you going for 18 years and kind of led you to where you're at now.
Yeah, well, the story is kind of an interesting one, and because it really routes through my dad. I was working at Macy's, going to college, like any college kid, and I was looking for some experience outside of like retail clothing sales. Right, I was going into my last semester of college, so I ended up at an internship expo and met NuView, and they had offered me to come in and interview, and I had no idea what the company did. Right, I couldn't figure it out on the website, and it just didn't make any sense to me. I didn't know what an IRA was. I didn't know the whole lot about real estate. And so I called my dad, and my dad actually said, well, they look like they let you buy real estate in an IRA, but you're not allowed to do that. I've asked my broker before, and he told me no. And I thought, Dad says no. Now I'm really excited for the interview. And so it really, I interviewed, and for a variety of reasons, I took the job. We were tiny. The company was 2 years old. I was employee number 3 when I was hired as kind of a quasi intern / sales guy. But it was my dad's reaction when I told him that, hey, I just left this 2-hour interview, and you can do this, and here's how it works, and here's why, your broker told you can't do it. And my dad said, I wish I knew about this, like 10 years ago. And I realized, like, my dad's just like, most people out in the world, like, why aren't most people doing it? And really the last 18 years have been all about educating the markets on how it works, what's possible. And it's been cool. I get to live vicariously through, my clients and what they do with their retirement accounts.
That's awesome. I love it. And it is fascinating, obviously being in the industry, right? It feels like most people know this, but outside of the industry, it is still kind of an underutilized investment vehicle. People don't quite realize they can do it or how it works. What do you think is one of the biggest reasons that people don't know? Is it Wall Street kind of trying to keep it, under the rug if they can, or what seems to be kind of the biggest reason there?
Yeah, I think you nailed it. I mean, none of us quite know. The rules have always allowed you to buy real estate or individual assets in a retirement account outside the stock market. But yeah, I mean, if you look who holds the money, it's banks and brokerages, and they give you this huge menu of investments, but it's still stocks, bonds, mutual funds, right? They keep adding to it, but the menu is still the same. And so, it's kind of like a restaurant, right? If you only eat at Chili's and Applebee's your whole life, you're missing out. But they're on every corner, they're in every city, it's convenient. And so some people won't venture off, some people won't take the time to explore. And when you buy real estate in an IRA, you're taking on some responsibility. You're getting huge opportunity, but you're taking responsibility. There's no Fortune 500 aura that you can invest in and just feel like I'm good. It's Apple. I know everything about them. When in reality, real estate is individual. And so I think it's a combination of all those things, but certainly Schwab and Fidelity and the major brokerages aren't pushing people into this market.
Yeah, it makes perfect sense. I remember when I worked at a brokerage house, and I was licensed. And I actually learned that you could do it through a client who I ended up helping them do some paperwork, because you could do self-directed IRAs where I was at, but we had never learned about it in any of our training. So that was kind of one of my first introductions into real estate investing. So it is tax season, right? Everybody's favorite season, I know. Obviously, this involves, tax advantages, and real estate in general gives advantages, but let's kind of go in that direction to start it and touch on, some of the opportunities and incentives that we do have available, through real estate, through alternative assets, and in IRAs.
Yeah, I love tax season. I hope my accountant calls me and tells me I owe $2 million, because that means I would have had to make about $4 or $5 million on my worst day to end up with that tax bill. So I say that a bit tongue in cheek, and for those listening, don't be scared to pay taxes at all. I think so many people let the tax tail wag the dog, and the reality of taxes are that they're a function of making money. And if you like making money, then you have to like paying taxes. Now, with that said, we want to minimize and take advantage of the tax code and the opportunities that present itself. So, real estate's interesting because real estate inherently has its own tax benefits, right? You have depreciation depending on the type of asset, bonus depreciation. So there's a lot of opportunities just to be in real estate and take some really good, strong tax benefits. What we talk about in IRAs is really the IRA is the greatest piece of tax code to the everyday casual investor, because it's the only way that you can, no matter what you do, defer or eliminate taxes that's readily available to you. There's no uniqueness. You don't have to go and figure out depreciation. You don't have to go do cost segregation studies. You don't have to recapture it. I mean, it's very black and white. And so one of the questions I always ask, and Jonny, I'll ask this to you, if I said to you, give me 50 grand today, right? And however much money you make, you will not pay any more tax for 2023. Would you write me a $50,000 check?
Yeah.
And for most people, the answer is yes. And what you just quickly routed through in your head is, what was my tax bill? Yeah, it'll be over 50 grand. Hell yeah, if I can give you 50 grand today and be done with it. Well, that's exactly what a Roth IRA is doing, but you don't have to think about it in any year. It's forever. So the IRS is saying, all right, Jonny, you want to put 7 grand into your Roth IRA, give me $1,500 today. And however much money you turn that 7 grand into, I'll never tax you again on it. And that's not just this year, that's next year and the year following. So every year you get to make that decision. So we love the tax benefits because I'll just step back and say, if your investment is your tax strategy, you may be leaving money on the table. You should have a tax strategy and an investment strategy and figure out where they work together, where they work against each other, and then strategize accordingly.
That's awesome. I love that. Such great advice right there. And, it is, good to know, like, I'm not a CPA, but one thing I'll say is there is a difference between CPAs and tax strategists. So if you are starting to get momentum in investing and you've got a portfolio and it's growing, maybe worth talking to someone who, is a little bit more strategy minded and can, point in the direction like what Jason is talking about. And if I understand correctly, didn't some things change like in favor of the Roth? Like they made the Roth even better. They increased the limit, right? Or how much, because it was capped at how much you were making, right? If I understand correctly, income.
Yeah. The Roth has become a more powerful tool. People keep thinking that the Roth is under siege by the government. And I think there are people in Congress that always look and say, hey, this tax-free growth for these investors is too good to be true. Let's put some caps on it, right? We don't want the Peter Thiels of the world with a multi-billion-dollar account. That's an exception. It's not the rule. The code has only become more favorable. They took the cap off of Roth conversions. And so that means that anybody listening can take all of the retirement money they saved to date in any pre-tax account and convert it to a Roth. And the beauty is, from a tax strategy, I love what you said about, there's tax strategy and there's CPAs, and you need to understand what you're asking your accountant to be for you. Because what most people do is they ask their accountant to be tax adverse. They ask their accountant to save them more money today at the expense of tomorrow. And that's not your accountant's fault. That's our fault, right? Because if you walk into your accountant's office and say, hey, here's all my paperwork, I want to pay the least amount of money in taxes, you've just told them, I don't even want to know about a Roth IRA because it will cost me more. But what you didn't tell them is, hey, I want to tax strategize so that over the next 25 years, I maximize my wealth by efficiently managing my tax burden. And if that costs me an extra $1,000 today, I'll write you the check, but I need to know that it's going to come back to me in the future. When you approach the conversation that way, you're telling the, accounting professional, hey, I need tax strategy, and they'll start looking at longer term. But most CPAs we live in, they're asked to be 1 year tax savers every year instead of really helping us plan. So, I think there's some accountants that just gravitate towards that, but I do think a lot of it is the way that we approach the discussion with them. And we don't invite them into kind of our picture. We just invite them into a small sliver of our life from a tax standpoint. So if you don't have an accountant that you're calling before you engage in any transaction, you don't have the right relationship with your accountant.
Wow. I love that. That is incredible insight. I don't think anyone's given that perspective before, but that's huge because, that changes everything. And some people, do just want to save this year, and that's totally fine. And for some reason, people do their own taxes, which blows my mind, but
I'm with you. That one never ceases to amaze me. Even no matter what you do for a living, if you have the slightest bit of self-employed income or any sort of passive investments or real estate deals, you're 100% chance you're leaving money on the table. And even if you're an expert on the tax code, you're not going to be an expert in your investment strategy because you're spending too much time on the tax code. So yeah, I couldn't agree more, man. Hire a professional. It's the cheapest advisor in any business line that you will engage as you try to build wealth. The cheapest.
Yeah, and you're almost like, and I'm not going to say always too general statement, but you're almost always going to net positive out from paying a professional because they're just going to find things. And like you were saying, especially when you tell them what you're trying to do, you're almost, like really like, what is it? Like 300, $500 maybe. Right. And I mean, imagine they get you an extra $2,000, that's net $1,500. You know what I mean? So,
right. And less the work. I mean, that's the other piece. So yeah, I actually just talked to my accountant and, going into tax time, and, it's amazing just being in Florida. I live in Florida, and, we had some small impact from the hurricane, but it creates some tax windows and some tax opportunities, and you can strategize around those. And so, I can't imagine how many people have damage that filed their taxes, moved on, and didn't take advantage of writing off any of the things that may have transpired. Did they lose food when the fridge, power went out? And those things all add up. And so, if you're not aware of those opportunities, how would you be as an individual? But an accountant deals with it every day. And so, yeah, we could go on. We could do an entire episode on the value of an accounting professional, but I'll let you save that one for another day.
Absolutely. No, I love it. So as we move forward, obviously most of my listeners, right, getting into investing, kind of that passive, right? Maybe they don't have, an IRA or don't understand how to do it. Obviously, you're a custodian. What does it look like going to a custodian, setting up the IRA, and kind of going through that process so that you can learn and ultimately use that tool?
Yeah, and you framed it in a way that I'll kind of recap, which is they may not have enough money in their account. And one of the things that we see, and this is like danger zone 101, is that so many people think that if I don't have enough money today, I don't need to start today. And the problem is they just defer them not having money for a longer period of time.
Yep.
So my first piece of advice is, even if you don't think you can get into the investment market or strategy that you want yet, get into the saving strategy that you want, because saving and investing are two different things. So, if I can put, let's say, $6,500 into my IRA this year, and maybe I can't go do a deal, right? Or I'm not sure. Well, I'm at least $6,500 closer than I was. And if I wait another year, right, I'm no closer. And so That's kind of piece one is don't be scared to start contributing. I really try to preach this, that investing and saving are two different things. And if you only invest out of your personal pocketbook, you're the least efficient from a tax standpoint, right? And that's what most people do. They don't make the decisions. And so they end up being what they think they're efficient because they're making money, but they're leaving money on the table because of tax inefficiency. And so, we start with put money in all the buckets you want it in, if that's IRAs, health savings accounts, educational savings accounts, 401ks, right? Pick and choose all the accounts that you can put money in that have the tax treatment that you want. And then step back and look at your investment strategy and say, all right, I've got a new investment. What is it? And then decide what bucket that investment goes to, right? If I'm going to, let's say, put 50 grand into a passive real estate deal, let's say into a multifamily project, and it's got bonus depreciation and it's got a really good tax strategy, I may not want that in my IRA, right? I may be willing, but if I don't have multiple buckets, it's not even up for consideration. I'm just making it from an investment standpoint. Now I'm in a position where I can say, hey, this deal actually isn't that great on taxes, or, hey, maybe this looks like it'll be shorter term, so I'll have to recapture depreciation pretty quickly. And maybe that isn't as attractive to me. Let me tuck this one in my Roth IRA because it's short term. I can make a quick turn on the money and it's 100% tax free. But those strategies only exist when they set up their account and start putting money away. It's like a career. You're not going to make the most money in your career year one, right? Your IRA is not going to make the most return in year one or year two. But if you start it and you start putting money away and you're diligent, you'll be able to participate in lots of deals that you see fit based on good tax strategy and good investment strategy. So I think the key takeaway from your question there is, number one, don't be scared to start. And then number two, setting up an IRA is so simple. I mean, it's completely digital. There's really no excuse to not be able to do it in today's environment.
Absolutely. I couldn't agree more. And I love that knowledge there because, like I'll tell people, listen, it's going to take you 10 years to start really building wealth. Whether you start now or you start in 10 years, it's still going to take you 10 years.
Right.
And I just think you nailed it on the head where people are so like, oh, I can only put, 5,000 into something right now. It's like, okay, well, like you said, that's 5,000, 6,500, whatever it is. So when they do open up the IRA, can they invest in other things, right? Is it only alternative assets or what other opportunities do they have?
Yeah, so we have brokerage capabilities. We're not a brokerage firm. So, I tell people if you're looking to trade equities, and be a buyer and seller, you're better off just leaving that account at a Schwab or anywhere else, because that's their business and they're very good at it. I can't compete with them. If you're looking to just, drop it into one stock or two stocks, you don't care about, the timing, you're not going to be watching the market 24 hours a day, then we can serve you just fine. We can help you with that component, and get you into public equities. But as a general rule, we're really not built for that. We're built for alternatives. So, it's really about where the client's focus is. And if their goal is alternatives from the get-go, then get the account set up. You don't have to have a lot of money to be able to participate in some of these investments. I've started accounts and I've had $2,000 in my kid's education account, and I partnered it off with other accounts and made investments. So you've got a lot of flexibility. And, this today, we don't have the time to go all the way deep into it, but, we do so much education on how to, put more than one account into the same deal, how to partner with other people. And it's no different than if you've only got $2,000 in your bank account and you want to go do a deal, right? You got to get creative. And so get the money in the account and start that a little bit of forced creativity.
I love that. That's awesome. And we talk a lot about real estate on this podcast, and so alternative assets can kind of get skewed in thinking that people are like, oh, it's real estate and maybe some business stuff. But the IRS sets it up as there's about 4 things you can't invest in, right? And it's very short. So kind of touch on those and what other alternative opportunities that, you can look at.
Yeah, the rules are surprisingly very simple. They can get complex when you get into kind of your IRA doing business with certain family members. But as a general rule, no life insurance, no collectibles, right? Pretty straightforward. The other kind of rule, if you will, is they don't want your IRA engaging in transactions with you or most of your family. And they do that because they don't want you to create opportunities for preferential tax treatment, right? If I have this Roth IRA that's tax-free and I can do business with myself, I'm going to funnel as much money as humanly possible into that Roth because I want to avoid paying taxes. And the IRS is well aware of that. So they just say, we don't allow it at all. As far as what alternatives do we see? I mean, really, real estate is the most common strategy that we see, but it's not just real estate. Buying rentals, it's everything. I mean, I've got clients that own burial plots and mineral rights, and clients that own boat slips. Real estate comes in all different shapes and sizes. So if you can get ownership and it's some form of deed, you can do it. I've actually had a client that bought tax deeds and tax liens on properties that had no access, and then tried to either get access to make the property, worth more, or I've seen them buy them and erect billboards depending on where they are and their proximity into some of the major roadways. So, you think about a small piece of land off a highway, that doesn't really mean anything. Well, if it's a small piece of land and you can't get a good easement. So there's strategies that we've seen, and again, they're all different shapes and sizes. Private notes and lending. We see a lot of that. I personally like to loan money out of an IRA because the interest payments would normally be capital gains tax to me. And in an IRA or my Roth IRA, they're completely tax-free. So I can reserve, my retirement money for stuff that's avoiding the biggest tax burden to me, which is capital gains. And so any kind of notes and lending from, I could loan someone 10 grand to pay off their credit cards, right? I could loan someone 50 grand to rehab a property. I can loan someone $1 million if I had it to go buy a building, right? I can participate in any kind of loan. And then the private equity and kind of other is tax liens, tax certificates. We see a lot of cryptocurrencies, precious metals, anything that any kind of business investment. We've got clients invested into a lot of syndication deals that are true property. And then we have a lot of deals that are actual true businesses. So, I could invest in a Subway franchise that my buddy's starting, or, anything along those lines. So you name it, it can probably be held in an IRA as long as it's not life insurance or collectibles. And as long as it's not something that you're going to end up using or personally benefiting, to or from the account along with your family members.
Thank you for that. Yeah. What he's basically saying is, like, if you go and you buy Airbnb short-term rental, you can't use the short-term rental. Your family can't use the short-term rental. Not even one day, I believe.
Yeah.
Right?
And that's right. It's just excluded. And the reason is because if you're staying there and you're not paying rent, right, that's lost revenue to your IRA. Right. Or it could be construed as you're taking money out of your IRA, right, prior to distribution age, and you're not paying tax on it. So yeah, they don't get involved and say you can do it a little, but not a lot. They just say you can't do it, period.
Yeah, make it super easy. That is the one thing. And I love that you gave that whole list too, because, that's why I love real estate, because you could literally do anything. I mean, you talked about the tax lien guy. I know people who trade raw land at like auctions. I mean, you can, if you name it, you can do it. And that's what makes it such a great vehicle. So what we've kind of touched on a little bit, everything. What are some of the misconceptions? We've talked a little bit about them, but what are some of the other misconceptions that people may have when it comes to these opportunities?
Well, I think one of the biggest misconceptions, and we kind of touched on it, but from a misconception standpoint, is that they think that the rules go away, under some sort of indirect provision, and they don't. So in other words, if I can't use my IRA to do something directly, I probably can't do it indirectly either. So, right, my IRA cannot loan money to me, right? Because that's a transaction between me and my IRA. And the IRS knows that I'll either do it at a super high interest rate to tuck money into the account, or a super low interest rate to funnel money out tax-free, right? Well, if I can't do that, I can't loan it to you so that you can loan it to me, right? I mean, in theory, I can, but the IRS, it's so easy for them to, in the event of an audit, to see that. So I think misconception number one is if you can't do it directly, don't spend time trying to think about how to get around the rules. Spend your time looking at opportunities that truly meet the criteria and move on. Because chances are the reason you're adamant about doing it is the reason the IRS is adamant about you not doing it, right? Because it's some sort of sweetheart tax provision deal. I tell people, what does your IRA do today? You own shares of Microsoft. You get a discount on a computer? No. You get do you get any benefit? Do you get the office suite for free? No, you get none. You just hope Microsoft goes up. Well, that's a pretty tough way to get to retirement, by hoping a stock goes up or goes down. With real estate, you can see it, touch it, feel it. You can understand the market that it's in. You can determine whether or not, it's in a good rental market. What's around there? What's the quality and condition? Who's the sponsor, right? Who's managing the property? You don't have those luxuries in the stock market. So we have to just get past this idea that we can't use it personally and move into the fact that I got to be an investor with that money one way or another. I might as well buy an asset class that I believe in. Misconception number two is fees. I get this one all the time. People say, well, why do I have to pay you fees? I don't pay any fees to Fidelity. And, there's a couple big, dirty secrets in the financial world, right? Number one, we at NuView, what you see is what you get, right? We charge administrative fees because I don't make any money off your investments. So if you buy a rental house and you sell it and make 50 grand, I get the same fees. Right. So there's no fee side. Well, in the market, right, they're making all their money on the fee side, all behind, closed doors. And so that's something that it doesn't make it bad. It just means that there's this misconception that it costs nothing to own stocks. And I can assure you, just judging by the number of buildings that bear NuView's name on it throughout the United States versus the number that bear Fidelity or Schwab, they're making a lot more money than we are. You don't have to feel bad for us. We're not a nonprofit, but it's a common misconception. The other one too is mutual funds and all the loads that are attached, to all of these asset classes. And so, again, it doesn't make it bad, but from a point of comparison, it's just a common misconception that if you pay us a few $100, that's a few $100 that you didn't have to pay Schwab. So I'd say those are the two biggest. The last one that I think is worth noting is that you can self-direct all types of retirement accounts and all balances. There's such a misconception that you have to have. I hear people all the time, well, how much money do I need to have to open an account? As much as you need to make whatever investment you want. And if you want to make an investment that's less than what you have, or, that fits in with what you have, then it's up to you to strategize around what that investment is. But we can open accounts and you can self-direct $1 if that dollar could be used for a meaningful investment.
Gosh, I love that. So we could literally do a whole podcast just on those three misconceptions, because I was a broker at those discount brokerage firms, and I've had this conversation a gazillion times with people about the fees and even the free trading now and everything. That was just extra revenue for them. That wasn't how they made their money. So I love that you touched on that misconception. And, the other thing too, you mentioned the timing, kind of the control too, is, people confuse liquidity with control, right? But really the control is in that predictability that real estate gives you. Yeah, it's easy to ride the ebbs and flows of the stock market right now. As a young person, I'm speaking, to people my age, but when you're 60 and all of a sudden you hit retirement right as the stock market's doing what it's been doing the last 18 months, then what? Then what do you do, right? That's your whole retirement account that's down 20, 25%, that you were relying on. And we all know it doesn't turn around overnight. So I really love that you touched on that.
Yeah, that's a great point. One of the things that we love about real estate, and I personally do, is it's income producing, or can be. And, when you look at some of these asset classes, stocks and bonds are good investments over the long term. Sometimes people are get bad timing, and that happens. And there's corrections in every market. The real estate market's not without corrections, nor is private, business or equity, nor is stocks, bonds, and mutual funds. However, if I turn back the hands of time, I started in 2005. It was the run up of this massive real estate, boom. And I won't suggest it's what we're going through today, but there's a lot of similarities, right? Everything was going up. Real estate, you could buy it today, sell it tomorrow. And what it does is it creates a lot of bad habits for people, right? They think they're the greatest investor, whether it's stocks or real estate. And I think Warren Buffett says it best, right? You don't know who's swimming naked until the tide goes out.
Mhm.
And when you look back at real estate, that always still gave it a major edge is that if I owned a piece of property and the property dropped 30% in value, my $1,400 in rent may have dropped to $1,300, if at all, right? So my income producing component was not in any way affected, or if it was marginal. The
Mhm.
real estate price is only material when I sell, and in an IRA, I really can look out at what sales need to look like, right? If you're 30 and you're not, you shouldn't even be considering a sale of an asset unless the strategy is to sell it, but you're never forced into selling any of these. And so even clients that were in their 60s during '06 and '07 that bought a bunch of properties at the peak, they live very healthily off the rental proceeds. In fact, they've made more money on that asset by owning it through the last 15 years on rental income than the appreciation. So there's some strategies that real estate just gives us that the market doesn't. I can tell you now, if the market drops 30% and real estate drops 30%, dividends will cease to exist across most companies, yet rents will not cease to exist. There's all the proof you need to know about not why real estate is a better asset class, but why real estate should be a considered asset class for true portfolio diversification.
Absolutely. I love that so much. I am, I definitely have a bias toward real estate, much like you, but certainly I understand the stock market. And don't tell people not to invest there. It just, you nailed that right on the head. That rental income's not going to go anywhere. And if you're young, you can ride that out. And even those 60-year-olds in '07 by 2015, let's see, '08, '09. So what, like 6, 8 years later, they were back up, on the appreciation side. And of course, the
Yep.
rent alone grew like crazy. So I love that. Well, this has been absolutely amazing. Appreciate all of your insight. Just been so much value. We'll wind down and jump to the final five. First question, best advice you've gotten from a mentor?
Oh man, best advice: save till it hurts. Yep.
Nice.
And it actually goes a step further. It's save till it hurts, and then feels good.
Nice. I like that. Yeah, that's a really, really good one. I've been working on a series of helping people understand their risk tolerance, and that's a really good point there. What's about your career that makes you feel like you're fulfilling your why?
I mean, mine is so easy. It's I get to help people do exactly what I heard in my dad's voice, 18 years ago, which is I wish I knew I could do this. And I can't go back in time and change the answer to whomever they asked it from. But from that point forward, and I mean, I watched my dad literally, go from very questionable retirement. He just retired a year and a half ago, and he's never been happier. And I won't say he only did it because he set up an account with me. That's not accurate. But the fact that he started buying and selling real estate in his retirement account is the reason he was able to retire, because it became a great tool that he could leverage and really do well over the last 10 years, that accelerated that kind of home stretch for him. So yeah, it's I get to help people do what they want, and I love that.
That's awesome. I love it. Favorite non-real estate or investment related book?
How to win friends and influence people. If you haven't read that one, I mean, use that more in your personal life, and it'll still benefit you in business. But yeah, great book.
Absolutely love that. I mean, that has just stood the test of time. Dale Carnegie, right?
Yep.
Yeah. Yep. Great one. If you could have any superpower, what would it be?
Man. Oh, it would so easy for me. It's to teleport. Um,
Nice.
I travel a lot, and nothing drives me crazier than I am relatively patient until I'm impatient, and then I'm really impatient. And so you spend enough time in airports, and believe me, I can't tell you how many times I've thought to myself, man, if I could just teleport to my bed right now, I would be a happy camper.
I just laugh so hard because we are so, so similar. It's like, I'll just like I'm calm, and then it's just like, no, I'm not anymore. And I want to be home right now. So
Right.
I get that for sure. I love that. Cool. What's the best way for people to get a hold of you and learn more?
Couple ways. I mean, I always push people to the website. I know that's a little generic and it's not me specifically, but NuViewTrust.com, spelled with a U. And, it's just full of information. There's so much on our YouTube channel and recorded content. We live in a day and age where there's no excuse to be ignorant, right? And the good news is ignorance is curable. Stupidity is not. Unfortunately, but ignorance is, and we're all ignorant, and the sooner you realize what is in the don't know what you don't know category, right? And what you learn sometimes through the know what you don't know category is where you can go and really expand your education. So, visit our website. You can email me directly at jason@NuViewTrust.com, again, spelled with a U. If you have questions or want to talk about your own strategy, and what you're looking to do, I'm not an advisor, but I love talking to people about, just some things to consider, maybe point you to some specific content that either we've recorded or people we know have recorded. So those are the best, ways to get to us.
Awesome. I love it. We'll make it, link it in the show notes, make it super easy. Jason, thank you so much. This was absolutely awesome.
Yeah, Jonny, thanks for having me.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CataniCapitalGroup.com to learn more.